right. We've got market open. My voice is gone again. I'm just gonna grab an arrow real quick. Okay, so I am on the 5 minutes, but let me go to 30 minutes. So this is ES. I'm just gonna take away all this rubbish. All right, okay, so not a lot of news today. So I'm expecting a slow day, which is a recipe for overtrading, right? So when you have slow days, it's just a recipe for overtrading. So as you can see, 30 minutes, you can see the pre-market. Your market has pretty much done nothing since it expanded in the last session, right? It's a recipe for disaster, right? We just overtrade, overtrade, overtrade. So personally, there are a number of things that I've put in place to kind of help with that, right? Um, Sometimes I change my number one, the one thing that is like the strongest thing. But if you watch a lot of my videos, you sort of gain from it that one of the number one ways for me to stop over trading was going back to basics, right? It was getting my model designed in a way that one, it sort of aligned with my personality, modus operandi, kind of whatever you want to call it. So we can say that that is the number one way that protects me from overtrading because the steps involved in my two-step model means that I actually cannot move a step until, one step is done, right? And because I can't do that, then I can't really trade. So step one, as you guys know, is find a direction. And that's all we're going to do. If I can't find a direction, I cannot trade. So what we're going to do now is wait, as you know, 30 minutes, roughly 40 minutes, depending on how fast price moves, and then we'll come back, assess, and then decide if we can move on to the next step. All right. So I'll come back to you guys around 9:30, 9:40-ish, and then we'll see if we have any real direction. All right. See you guys soon. All right, guys, it's 10 o'clock. You can see we clearly have direction. It was a bit messy here. We don't have any 5 minute fair value gaps, which will be in yellow. And then if you see them in green, it's usually 1 minute. So I just, as a habit, I just mark all these fair value gaps. So what we need now is, so we have a clean swing high here. What we need now is a clean swing low. So once those two are established, we can move to step two, which is in the model, it's find the fair value gaps. And then step three is then overlap the fair value gaps with the fibs, right? And then the rest is experience. All right, the rest comes down to watching the fair value gap to make sure it supports price in the direction that I want it to go. So right now, it's telling me it wants to go down. It's inside that 30-minute time box that we look at. And if I look at the points, yeah, we've done enough, right? So this 37-ish points, and I'm looking for 20 plus, right? So that's good enough, right? I don't need to do any more. So now what I'm just going to do is wait. So I'm just going to come back when we establish a low. By the way, price may just keep running. That's fine. What that means is I'm not in the trade. So as I said in the beginning, if you have slow days, um, what really keeps me out is my model. That's the main thing. There are other things like uh, really limiting how many sessions you look at during the day. So just trade New York AM, just trade New York PM. one a day. Um, don't do Asia and then do New York. Don't do London and then do New York PM. Right? It's stuff like that, right? But I think the biggest impact, this changes probably every day, is the model itself, my model, right? Because I designed it to be consistent and to give me clarity. All right, see you guys once we set a low. So this is the 5 minutes, by the way, the 5 minutes. Um, that's what I always look at. That's the operational time frame. So once we have a low, um, then I'll come back and then assess, okay, can I do the next step? And then move on from there. So no trades right now. See you once that kind of happens. Okay, it's 10:45 a.m. Uh, we have a swing low, but we are, slow market hesitating. So what I've done in advance, I've just run this fib to this from this high. It can be from this high to this low. However, a couple of things to note. First, again, close to lunch. Second, which is a good thing, we only have one fair value gap, so that's the only thing we need to concentrate on. I mean, it's no different from saying, focus in on just New York AM or Asia, right? That's what the model does, helps you focus in on something. The other thing I'm aware of, just FYI, is on the larger time frame, we have this bullish move from here to here, right? And this move from here to here, and this retracement down is almost 50%, right? If this moves into the 50%, I will sit back and reassess, right? Um, I'll reassess the whole thing because this might be a much larger two-step. Does that make sense? So I'm watching both this on 30 minutes. So I'm watching the 30 minutes and the 1 hour as one sort of aligned time frame, and then I'm watching the 5 minutes, to align with the 30 minutes and the 1 minute and the 1 hour. Hopefully that kind of makes sense. All right, so we'll put this back on the 5 minutes and then come back once something interesting happens. All right, sorry, just wanted to say before I come back, um, maybe I wasn't clear enough. The 30 minutes and the 1 hour time frame, the trend, they are both at the moment bullish, right? 1 hour is bullish, the 30 minutes is mixed. So that's the higher time frame I'm following, right? What I want to do is follow the higher time frame. That gives me more confidence. If I'm going against the time frame, I'm aware of the risk. So right now it's a bit mixed. 1 hour is bullish, 30 minutes is kind of nowhere. So I'm not sure if the 30 minutes wants to align with the 1 hour or the 1 hour will follow the 30 minutes. So it's a bit unclear. All right, that's why I had to zoom out a little bit. But the model is still the same. We'll see what price does in the fair value gap if it holds. Okay, if it doesn't hold, then we just ignore the whole thing. All right, it's 11:40 a.m. So here's what I'm going to do. We have two scenarios. Okay, so first of all, and that's because we are approaching lunch, and I really don't want to do anything during lunch. It's a slow day, so there is time to just relax and take time to make a decision. So two scenarios. Scenario one is based on the AM session, micro session. There is a bearish two-step model forming, which is we wait for price to come back into this fair value gap, okay, and then consider a trade from there. Now, this is just going to set up AM, but delivery looks likely to be PM. So I've mentioned this multiple times, where sometimes AM does a setup and then PM delivers. I don't normally trade those, but today we'll just monitor the trade. Now, there is a second scenario, which is a bullish two-step, and this is on the 30 minutes and the 1 hour. Okay, so there is this bullish two-step, this low to this high, and this retracement. Now, if this price goes into this alarm here, this 50%, um, goes into the alarm, you can see that there's a fair value gap there that is likely to prevent prices from going lower. So um, you guys know that I always talk about looking above you and below you and asking yourself one simple question: what's above you, so price, that can prevent prices from going higher, and what's below you, so again price, that can prevent prices from going lower. And that will prevent prices from going lower. Once we hit 50% and that fair value gap, it's going to prevent prices from going lower. It's not a guarantee, but what it means is there's two scenarios here, and it just depends on what price wants to do now. Is it going to drift lower into that 50%, in which case I will step away from it and start to consider a bullish two-step scenario, or is it going to try and get into the micro session fair value gap, and then I'll consider a bearish scenario. So that's it. We'll come back once something sets up, and then we can go from there. All right, guys, it's 12:40 p.m. I have actually decided to abandon this trade today, so I'm not going to do the PM, and that's because this entire trade actually happened on the 15 minutes. So I trade on the 5 minutes. That means you will miss out on trades on other time frames, but I have to be consistent, right? That's why I always stay on the 5 minutes. The best I would do is drop down to the 1 minute only when I need to trigger the trade, the actual trade, get the entry. But I use the 5 minute fair value gap. However, if you're using the 15-minute fair value gap, so I'm on the 15-minute right now, you can see that the model works the same. So you have the anchor at 9:30, you have this high, you've got this low, right? So swing low, swing high. You grab your fib, okay? And what do we do? Fair value gap. This two lines here is the 15-minute fair value gap that overlaps the 30, right? Fib. That's step one, step two, and step three of the two-step formula, two-step model, sorry. And all you do then is grab this fib and measure 100%. We are virtually close to it. Can you see that? If we go back here, let's see if we could have got the entry on the 1 minute. So let's pretend that we did see this, and let us make sure I'm looking at the right one, and let's go to the 1 minute. Okay, so the entry would be around here. All right, so if we were looking at this, would I have got the entry right here? Okay, so as you know, we're looking for rejections, we're looking for inside bars, we're looking for engulfing patterns. We actually have both here. We have an inside bar, and then you have this engulfing band. So you have two patterns basically in one, right? You wait for that push away from it, okay, which we get, fair value gap, wait for price to get back into the fair value gap, the entry would have been here. Uh, that's it. That's the model in a nutshell. I missed it today. I'm not looking at the 15 minutes. I am looking at just the 5 minutes at the moment. I don't look at the 15 minutes. You win some and you lose some. Okay, so I'm not taking a trade PM. That's it. I'm done today. I'll be back tomorrow. So I'll see you guys in the next video.